Market at all-time highs again, given everything we have happening in the market. We had high CPI number yesterday. We had a high PPI number yesterday, CPI being the Consumer Price Index, which measures the price of goods. The PPI is the Producer Price Index, which measures the price that the producers, those manufacturers, are paying for those goods. So both of those being high means inflation is high. We're paying more for everything. On top of that, we still have $100 oil, which is interesting given we're still at all-time highs here in the market right now. But that's not what I wanted to talk about today. Today I wanted to bring you two stocks that I found on my scanner that are finally breaking out after running sideways for a very long time. This is one of my favorite trades. I call it the bear to bull reversal. So we're looking for stocks that have been beaten down. They've been in the dip for a while, but they're getting ready to turn around right now, and they're showing signs of breaking out and going much, much higher. So the two stocks I'm talking about are Li Auto, which is a Chinese EV maker, and the second one is Enphase Energy, which is part of the energy play, which also leads into the AI play. So let's get into it. I'm going to walk you through both charts. I'm going to walk you through both trades that I did that will give you a chance for these to run and potentially make good profits on them. And then we're going to take a look at what we're going to do if the trade doesn't go our way and when we might want to get out. So let's jump right in. So first one we're going to look at is Enphase Energy. Ticker is ENPH. So we'll go ahead and switch over to that chart. As I'm looking at this chart here, I see that the chart has our moving averages. So my 200-day moving average is what I have on the chart here, which is my green line. This is a very important moving average. It's one a lot of the institutions use to determine whether a stock is trending bullish or bearish. If the price is below the 200-day, the institutions typically and traditionally treat this as a bearish trend until it crosses back over. And you see here we have some crossover starting earlier this year, but we pull right back down below it, which is kind of very healthy. If you notice, we had the lower lows down here back in November, and now we have a higher low here in April. So that's not what I was paying attention to today. That's not what popped on my scanner. What popped on my scanner was this big green candle, which was also matched up with a nice big green bar down here for the volume, which was also above the average volume, which is this orange line. So I'm matching up those two, and we're closing above the 200-day. So now we're back on trend to go upside bullish, right? So after we've been going sideways bearish all this time, we pulled up, pulled back, and now we're getting back, and the energy is coming back into this stock. Now, let's see if we're anywhere near a resistance. One of the things that I have in another video, which I'll link to here at the top, is using our Fibonacci retracement to find our support and resistance very easily on this chart. So what we do is we go to our Fibonacci tool here in TradingView, and then we'll click on find the low for the last year, which is what I'm looking at on this chart. I'll click on the low there to start, and then I'll find the high on this chart, which is actually here in February, and I'll match that up. So now we have our support and resistance lines. We kind of know where we are. Not only have we identified that we're breaking out and getting higher and going bullish, but now we can identify the levels as we're going higher. So if we want to take profits, we could be looking to take profits at any of these lines above. But the other more important thing is we also now have a line for which we can pay attention to for our stop losses, right? So this is very important. So we could look at this line here as a potential play for the stop loss, given this candle yesterday had a low just below that line. We could maybe set our stop loss somewhere below that, right? So we're going to look at that a little bit later as we get into the trade, but I wanted to point that out. Very quick, very easy to find your lines. You don't have to go hunting and pecking and looking at all the chart and trying to figure out if these lines matching up, these lines match up. No, you just use the Fibonacci retracement. Easiest way to find it. Find the low on the chart, high on the chart, link them up, and the rest of the lines will just take place, right? So as you can see here, one of the things that became obvious to me as you put the fib on is that price was ranging between this 618 level and this 236 level for a long time. We had a little brief dip here below that, but this was the range it's in, and today we're now getting up and approaching higher than that. So we rejected off of this resistance here, so not too concerned with that because the momentum from the volume is what I'm paying attention to. So the buyers really stepped in hard today. Big green candle, big volume. We'll probably push well above this resistance here as we get into tomorrow. So that's what I'm looking for to tomorrow. We could set our stop loss down here. But let's look at the trade that I'm looking to take on this. So let's pull in the thing. I'm an options trader, so I'm going to be looking at what options I could use to take advantage of this particular situation in the market, right? And what I'm seeing on the chart. So the option chains here, I'm in trading Thinkorswim with Charles Schwab Thinkorswim. This is the platform I trade. But this could very well be Robinhood. And what I do is I put in the ticker here, ENPH, and then I'm going to come down. I like to give myself some time here. One of the things why ENPH is breaking out, it's part of the solar energy play, right? And energy is a big deal right now, especially with AI and with everything else going on. So I want to give this one a little bit more room to run. I want to give myself some time. So I'm going to look out here maybe a year out, maybe a little bit longer. So if we look at the June 2027, that gives us 1 year from, a little more than 1 year from today. And then I'll look at either the at the money. Currently the stock is trading at $42 a share here. I can see that at the top. And so that means I have 40 strikes and 45 strikes here to play with. And the stock is right pretty much dead in the middle, right? So what I like to do in this case, I try to save myself a little bit of money in this case. So I'll pick the 45 strike because it's the one that's next out of the money, which means we haven't reached that price yet. It's probably there's no intrinsic value in it yet because the price is still below that strike. It's still below $45 a share. So that's what we're looking at here. I can probably get into this one for the June if I'm looking at the mark here. This is for $12.50, call it, right? So $12.50 a share. Each contract is 100 shares, so that's $1,250 I would have to put up in order to get into this contract. So that's one way I could play it here. But sometimes I like to also take a look at the next one to see, am I saving a bunch of money? Is there a big difference? And there's a $400 difference here, but I'm going to give myself an extra 6 months. So what I do in this case is I would pick the January 2028. And then for that one, I could get in for $14.50. So really just $200 more for another 6 months of time. So this gives it more room, more time to run. As you look at the chart, we have a lot of upside to this one. So I picked this one. I picked the January 28, 45 strike option, call option here. And this is the option play that I'm looking at. I got into it for 15. It's actually lower right now, so you might get a better price than I am. This is not financial advice. I just want to show you when we see these opportunities on the chart, especially when we're in this kind of bear to bull reversal and there's a potential for a big run higher, you want to give yourself time on the options. Now, I could have very well gone to the June, but then I only have 36 days. When June 36 days comes up, maybe it was a winner, but then what do I do? Do I still have room to run? I won't, right? I would have run out of time. I have to then go pick another strike. So I'd rather just save myself some time, not have to try to figure out how to swing or day trade this, and pick this January 2028. I can get out anytime before that, and that's what I'd look to do. So my stop loss being down here at about 36, call it $36, right? And I will be doing the $45 strike. We'd be up here, right? So let's drop a line on that one. We'll put it right here at 45. So this is where my call would be. So if price goes up, as you can see, the chart is pretty blank so far. So let's zoom out to the weekly and see kind of where some of our other levels are. So let's clean this up a little bit so you can see better. And I'll hide the moving averages for now. So if we break out of this, there's a good chance we get up to 59.60 range, right? This is what we're seeing out here on the weekly. This is the next area of resistance or support from back in November. And if we break out past that, we're looking at, levels all the way up here in the low $100 range, right? 110, 100, 110, 120, all the way potentially up to 140. Now, we get to 140, that'll be $100 per share move on this. But I certainly definitely want to give this thing time to run, which is why I picked the January 2028 45 call option to buy. All right, so let's jump to the next one. Next one is Li Auto. I'm gonna jump back to our daily chart here. Li Auto, same thing. Popped on the scanner. I saw that it was coming up. This one is a little bit different. The story behind this is Trump's trip to China was today. So there's a lot of excitement around the U.S.-China trade and what might happen with EVs. Li Auto is a EV maker, so they make electric cars. So what we want to do here, same thing we did with Enphase. So we'll do our Fibonacci to find our support and resistance. Here's my low, right? But the high this time is way back here, back in July, right? So I'll go ahead and drag it there. So this is how we find our support and resistance very easily on the chart here. And then you can see in this case, Li Auto actually broke out big time above our resistance level here, which was at 1956. So we also have the big breakout, big green candle. This candle looks much more bullish than Enphase even. And then we have the huge volume down here as well. So as you can see, a couple days ago, we also had huge volume on May, but we didn't have the big green candle that day. And then we had a red one the next day, which is fine. And we were still below the 200. So we're still watching inside of this range, right? So the price has been, it came all the way down, started going sideways, and now it looks like it's truly reversing. We actually closed above the 200-day moving average here today by 4 cents, it looks like. So tomorrow we're looking for this to go back up. And again, our stop loss in this case, I'd probably set this with this gap here. I'd probably set my stop loss below this orange line, which is my 50-day moving average. Let's call it $18 for the stop loss, right? That's where we would look to get out if price closes below that. The other thing you need to watch out for Li Auto is they have earnings. Earnings is coming up next week, or May 28th. So in a couple weeks from now, not next week. And we're going to be looking at what happens then. So we have possibly 2 weeks of a big run up. Maybe something leaked, right? Maybe we get some good news out of China here for the Li Auto, or maybe this is just energy coming in from the market with Trump's trip to Beijing, right? So we have that going on. So let's look at what we can get with the Li Auto trade here on the options chain, right? So let's take a quick look at that, and we can see what we get with that trade here real quickly. So let me switch over to my options here, and we're gonna go to the Li Auto, and here this one may not be as long running, right? Given that this is really around the theme of the China-US trade bargain, but I still want to give myself time. So I'm going to look at this one, not necessarily go all the way to 2028, but 2027 in this case, right? So I'll stop here. We could look at the 2028. So 2027, if I look at the, stocks trading at 20, the at the money is right here, 350. We could maybe look at the 22s, which is the one I actually did. And I got into that one for 250 here for the January 2027. So let's look at 28s. So this is double what I would spend for another year. So this is why I kind of backed off, given that I don't feel too great about how long this particular trade could go, given it's a China themed trade and not really part of a larger AI theme, right? So I was looking here at the 22 strike, January 27, 22 strike. I got into this one for 250. So this is the option I'm looking at. And remember, we're looking at $18. If it drops below that, we're going to get out, right? So one way to kind of look at your risk reward on this as well is we can take a look at, given that these guys have earnings, one of the things we want to look at is earnings was on the 28th. So we'll look at the closest expiration to that, which is May 29th here. So if we open that up and we go over to the right, actually we don't need to open it up. We go over to the right on that one. We'll see that the implied volatility or implied move between now and May 29th is $2.21. So the market is pricing in that Li is going to go up or down, right? That's why you see the plus or minus here. We don't know which direction when earnings hit. Up or down $2.21. So using our Theo calculator, which I showed you last Friday on the IDT trade, if you want, you could go back and watch that video. If we go up $2.20 here, and we set our date to May 29th, you know, that gets us to 22.20 as the price of the stock. But then let's look at what our option would be worth. So we go back to our January 2027, the 22 option. When you turn the Theo price on, you will get a Theo price column right here in your option chain. So on the 2022, our two, in my case, 250 or 260 contract, if it only goes up by what they expect, which is the $2.28, this goes to $3.75 per share on the contract. So you're looking at almost a 50% return here just to earnings, which is just a couple weeks away, right? We're talking about 16 days out to make 50% return on this investment, right? Now, be careful of this. Trade small, because there is the chance that you lose everything. This is options. This is not financial advice, but I'm just trying to educate you on how you could leverage the market to make bigger returns on these types of setups, right? So on this 2022, if we go up $2, it goes to $3.75. If we go up, let's change this to say, okay, what if it goes up $4, right? And that's very much a possibility here. If this goes up $4, then we're looking at almost $5 per share on this, and that's a true double at that point, right? So if there is true news leaking out between now and May 29th, and Li Auto shoots on up to $24 range, right, which is very possible, then we're looking at potentially doubling our money on this particular trade in a very short period of time, right? And if that run continues, we could certainly either roll this option up, which we could talk about in another video. If you want me to do that, please leave a comment below, or we could just take our profits and move on to the next trade. Now, thank you for watching. I'm the Wall Street Yardie. Just wanted to bring you these today. Hope you enjoy and you learned something from this video. If you liked it, like, subscribe, and follow us here on YouTube.